The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
There's a sporting goods store that's popped up on the growth and income radar. Our growth and income strategist, Todd Bunton, has more on that now. So this is a company that has many stores, but centrally located geographically, it appears.
Yeah, so they have 440 stores in 11 states, but over half of their stores are in California. So us Midwesterners probably not too familiar with the brand.
We're
But
talking about Big Five Sporting Goods.
that's correct. Yeah, Big Five Sporting Goods. That's the name that they operate under.
Yeah.
And you can contrast them to Dick's Sporting Goods, which is a bigger retailer, not bigger just in store count, but in square footage. So the Big Five average store square footage is about 11,000.
Okay.
Dick's Sporting Goods is over 35,000. So
Wow.
it's kind of those smaller ones that I grew up with as a kid that have all the traditional kind of sporting goods lines, but just in a smaller store format than your big box kind of retailers there.
Okay.
And they're growing too. I'd say about an average of about 10 stores a year. They're expanding.
It's a pretty good clip.
Yeah, so they're expanding their store count, but small company too. Their market cap's around 330 million. So not a company you'd expect to pay a big dividend, but they do have a very solid income, which I'll get to in a bit. But the company's delivered solid same-store sales growth last quarter, and also saw their profit margins expanding, which led to a big earnings beat on April 28th. And that prompted analysts to revise their estimates significantly higher for both this year and next year. That sent it to a Zacks rank of 1, which is a strong buy rating. You can see with me here, I have the agreement and magnitude of consensus estimates. Those are all moving in the right direction. So analysts unanimously raised after the beat, and then the magnitude of that is pretty significant. And that's why it's a Zacks rank of 1, which puts in the top 5 of all companies that Zacks ranks based on earnings momentum.
Okay.
So in addition to that, the company, so based on consensus estimates, analysts are expecting about 11% earnings growth this year and 14% growth next year. So a good double-digit growth story for the foreseeable future.
Sure.
On top of that, they pay a dividend that yields 2.4%.
Yeah, it's not bad.
So very solid income in this low interest rate environment. That's above the average of your typical S&P 500 company. And like I said, with just a $330 million market cap, you wouldn't expect a company to be this income friendly. But here we are. So you're getting the growth, you're getting the income, you're getting it all at a reasonable price too. They trade about 16 times forward earnings. The industry median's 19 times. And if you look, I brought with me some competitors here. So Cabela's, Dick's Sporting Goods, and Hibbett Sports, all kind of in the sporting goods,
realm.
Exactly. So you can see Big Five has that perfect blend of earnings momentum, of yield, and of reasonable valuation. Could be solid total return potential in this name throughout the second half of 2015.
Cool. Well, we thank you for alerting us to that. Do you own it?
I do not.
All right. Check out more stock commentary, stock picks, stock picking strategies on our website, Zacks.com. Get on over, link to it all right off the homepage. With Todd, I'm Terry Ruffalo.